Good afternoon. Let's just quickly have a look at a debtors age analysis. So, what is a debtors age analysis? This is you looking at all of your debtors within your debtors ledger, and you want to see for how long have their accounts been outstanding. So, remember that you allow your debtors a credit terms that you allow. So you tell them you have to settle your account within 30 days. But people are people. People don't listen. People don't do what they are supposed to do. And or things go wrong for them and they can't make payment when it is due. But you need to consistently keep track of your debtors because you have to consider things such as bad debts. Because remember, you can't keep on carrying a debtor within your SFP under your current assets if you don't think you are going to ever recover that amount. Because remember, prudence says that you're not allowed to overstate your assets. So that's how GARP comes in here, or GAP. So you need to ensure that you know at all times who owes me money, how much do they owe me, and for how long have they owed me. If it is a situation of a debtor who's just an extremely slow payer, then you can always opt for interest on their overdue account, or maybe you can try and get them to make payment by allowing them some discount. So also, this helps you to see if any of your debtors have exceeded their credit limit, because you are going to tell them based on their income and the other accounts that they have and their disposable income, you are going to determine what they may purchase for. In other words, the limit that their account will have. Once they reach that limit, they aren't allowed to buy from you until they have made payment. It's a way of ensuring or trying to prevent that you don't get into a situation where you have this one person who owes you thousands of rands and then the person can't repay you. Okay, so it's just a form of internal control. But then certain people have access to authorize certain transactions on your system. So that's why we have segregation of duties. So there should be segregation of duties, being that if I'm the person who's recording this sales transaction, I may not have authorization to change one of the customer's credit limits. The reason being that if it's my friend, I can decide, oh, shame, I'm going to allow this person to buy from me, even though he has reached his limit because I know he will make payment. And then that ends up being the debtor who doesn't make payment. Okay, so authorization is extremely important and segregation of duties. Another thing is when we are doing this debtors age analysis, we are going to start calling the people whose accounts have been overdue for a while, debtors who just haven't been making payment. And then it could be that when you phone this debtor, he tells you, listen here, but I did make a payment. I went into your store and I made a cash payment. Here's my receipt. And then you have to then go and investigate and ask your employees what happened to the amount that this debtor paid, because it could be that you have possible theft within your business or possible fraud. So extremely important to always look at this debtors age analysis every month end. Right, so what does this mean? It says that, first of all, our debtors are granted a credit limit of 20,000 Rand. So your first step when I ask you to analyze the debtors age analysis, your first thing is to go to the total that each debtor owes you and check to see if anyone has reached their credit limit or exceeded the credit limit. And here we can see that debtor number 1 has reached his credit limit, and debtor number 2 has exceeded his credit limit by 15,000 Rand. That's a lot. And then we also have 3 others, but they are still within the credit limit. Then it says that debtors are granted 30 days to settle their accounts. So this is the current month. So the month that you are currently in is Feb. You can also see over here the age analysis for Feb or on Feb. So that means your current sales is therefore sales that happened within the month of Feb. Then 30 days means their account has been outstanding for 30 days. So it's not in the current month, but the month prior to the current month, they made purchases and they still haven't made payment. So 60 days is 2 months back, December. There we go. And this is then November and months before November. Okay. So they are saying that they want their debtors to make payment within 30 days. So you want your payment over here. You don't want any amounts outstanding after 30 days. And that's what you now need to look at in your commentary. First of all, you're going to identify the debtors who have reached or exceeded their credit limits. And then you're going to go to who has been outstanding for longer than the credit terms allow. And debtor C is, first of all, a concern because he has exceeded his credit limit. And then on top of that, we have already allowed him to purchase from us in the current month, knowing that his account is already overdue. Okay, so credit limit reached, and then we allowed him to purchase during the current month, even though his account is already overdue. And as you can see, there's quite a large amount that has been overdue for more than 60 days. So clearly, the controller doesn't have proper control over the debtors. And it says that we had a new controller that started on the 1st of March. So clearly, this has not been working out for us. Then if we're looking at the next one within the overdue accounts, we have Miller. So Miller hasn't been purchasing from us in the past 2 months, so the current month and then the previous month. His account has been due since December, and it seems as though he has disappeared. He's either not contacting us or we can't get a hold of him. Something's wrong here, and this could be a possible bad debt. Okay, so it's overdue. Then the last one, Nkosi, same thing. We are allowing him to buy from us, and he's very close to that credit limit, even though his account has been outstanding since December. So what do we do in these cases? We charge interest, first of all. We then try to encourage them to make payment by telling them that we will allow discount if they do make the payment. And then another thing is you can freeze their accounts. In other words, there's no transactions that may be recorded in this account until you have received either partial payment or the full settlement of the account, depending on the terms that you have both agreed upon. Okay, so this is definitely also concerning. Even though it's a much lower amount, it's still concerning because we are still allowing him to buy from us and he's very close to that credit limit. Because can you now imagine if in March he purchases the last 1,200 Rand of this account and then we never hear from him again? Then it's 20,000 Rand that you are possibly going to have to write off as a bad debt at a later stage. And that's not good. Okay, then you look at the rest of them. So we've now addressed Cowley, we have addressed Miller and Nkosi as well. We have also said that here we are concerned because the debtor in the first month of being a debtor has already reached his credit limit. And that is definitely also concerning to us because it looks a bit strange. Like, why would you purchase for the full amount, that full limit, in the first month or in 1 month? It always raises a red flag whenever something like that happens. So B. Brown, we just need to keep an eye on. For now, we are happy with B. Brown because his account has been outstanding for 30 days. He's not really close to the credit limit. However, we're just going to keep an eye on him during March to see if he actually makes payment for this 2,400. So that's how we look at the debtors age analysis. The last bit that I want to do is, if we then ask you to calculate the percentage of debtors that are outstanding. So if I now ask you, please calculate the percentage of debtors whom are overdue. That means I'm only looking at the people who have been owing me for longer than the said credit terms. So in other words, for longer than 30 days. And that is the 14,600 plus 15,000. So that is the amount. But if I ask you for the percentage, you have to take those two amounts and you divide that by the total outstanding debtors times 100. So 31.3% of your debtors are overdue. That is not good at all. You do not want to be in a position where you have to write off at a later stage 31% of your debtors book, because there goes your profit. Okay, then the debtors who are adhering to the credit terms is the 53,000 plus 11,900 divided by the total times 100 to get the percentage. So 68.7% is still within the credit term. So we are happy that we have a large group within the credit terms. We are just a bit concerned because we don't want to write off 30% of our debtors as bad debts. So that is your debtors age analysis.